Hi, I'm Giles Andrews. I'm one of the co-founders and the CEO of Zopa, which was the world's first consumer peer-to-peer business.
Fantastic. And I understand you have a 10-year anniversary?
Yes, so on Sunday we turned 10, which is very exciting.
Happy birthday.
Thank you very much indeed. And we're using that as an excuse for lots and lots of parties.
Excellent.
So we're having a customer party on Wednesday in a bar, not actually that far from here, where we're hoping for 700 or 800 people.
Fantastic.
Should be quite an occasion.
Can you tell me a little bit about your journey over the last decade? Where you came from and where you are?
So the idea of Zopa was born in a barn, ironically. A group of people who left Egg, the direct online lending and credit card business, that was spun out from the Pru. And we came together as a group to try and build a better and new proposition for consumers to lend and borrow money directly between themselves and cut out banks. And we were inspired by the efficiency of the bond market and how that had effectively replaced banks for large ticket corporate lending by using data and technology to inform risk. And also inspired by, rather differently, by eBay, which was using some kind of social return to create stickiness, if you like, and well, by 2004, when we came together, eBay was the largest online marketplace in the world, and you couldn't explain its incredible growth just by pure everyday Tesco-like low prices or value. There must have been something else going on.
Yeah, and you were a pioneer back in the day.
Absolutely. So we were the first by over a year, and the first copycat of Zopa was launched in the US just over a year later. We were the first in Europe by a number of years. In fact, no one joined us in the UK until I think 2009, 2010. So the first years were characterised by slightly lonely growth.
Yes.
And actually the arrival of other players doing what we did was a help to us.
Right.
In the sense that it provided some extra validation for the business that we'd been working on at that time. But the fact that we were by then 4 or 5 years old had some heritage, dare I say it, in this world of alternative finance, and we'd been through a credit cycle. So we'd lent money prior to 2008 and collected it post 2008, and had ridden through that crisis really unscathed. I think allowed us to sort of created a perfect storm, if you like, of ingredients for the business really to start growing much faster 2009, 2010 onwards.
And are you still as excited about the financial tech industry as you were back then? I mean, it's great that we've got 1,000 people in a room.
So it wasn't called Fintech then.
Of course it wasn't.
So then it was just characterised as sort of an alternative to banks. Yes. Yes, I'm absolutely as excited by what we're doing. I think when we came together, we thought we were probably more anti-bank then than we are now. I think in the run-up to the crisis, banks were not necessarily doing great things. And I think we were one of the sort of motivations for the team that came together, if you like, was to do something better than banks, and that motivation still exists. And
you're a founding member of Innovate Finance, and what role do you think that organisation can play over and above the event today? So
the industry you've described as Fintech has become very big in London, as we heard earlier today. There are more people employed in Fintech in London than there are in New York or San Francisco. And therefore the need for some sort of unifying voice is clearly there, both in terms of managing other stakeholders, interaction with the government and parts of the government is very helpful. And I know that Innovate Finance is part sponsored and certainly was launched by George Osborne, which gives you an idea of the political clout behind it. And I think it's useful for the industry to have that kind of unifying voice.
Fantastic. And your predictions for the next 12 months, if I can press you on those?
12 months. Well, I think the industry is in real momentum. When I say the industry, I mean Fintech more broadly, but I also mean peer-to-peer lending is in real momentum. So I think you'll see the significant and well-run peer-to-peer lending platforms doubling in size again this year. By which point we're becoming a very significant, we could be as collectively getting up towards 5 to 10% market share of the activities we do. I think I'm sort of happier on a 3 to 5 year view than a 1 year view. And I think over that time we will have become a very significant competitor to the banks.
Fantastic.
Perhaps sort of in the same way that the US, the majority of lending is now not done by banks. Yes. You could imagine a similar scenario here as well.
Yes. Well, we'll hold you to that. We'll have you back.
Thank you.
Lovely to talk to you, Giles. Thank you very much for your time.